Trend investing is buying and selling investments based upon their current trend. Here at 1 Degree Advisors, we call this strategy tactical. Today, we're talking with Ryan Kirlin of Alpha Architect on why trend investing can be an excellent component to a long-term investment strategy. If you're interested in taking your investment game to the next level or simply understanding this philosophy better, stay tuned. All right, Ryan. Well, thank you for joining us today. We're going to dive right into it. And if you can tell us, what is trend investing?
So trends are all around us, and they're particularly easy to notice if you look back at old photos of yourself from different decades, right? Maybe you had platform shoes in the 70s, shoulder pads and neon colors in the 80s. I don't know. But so trends come and then they come to an end too. So you're not wearing the same styles today that you were wearing, a decade ago, 2 decades ago. So in investing, trends exist too. And trend investing is simply owning a certain asset when it's performing well. And then you're looking at certain signals. So when you get out, that when it's no longer performing well.
So Ryan, when does trend investing tend to work well? Is there a certain market environment?
Yeah, so trend investing works well when asset classes are trending well, right? So either they're consistently trending up or down. They trend following works well when markets are trending down as well for extended periods of time. On the upside, people may refer to it as climbing the wall of worry, right? Stock prices keep moving higher and you're going to hear it all the time. Is this the top? The market's a bubble. And then you look back at your stock portfolio 3 months later, and markets have gone even higher, right? So things are trending well over an extended period of time, and that can be scary in and of itself. And then the reverse is also true. You can have long extended drawdowns in the market, like the 2008 time period, where the market steadily marched down for months. And then, it kept being like, wow, is now the time to get in the market? Is now the time to get in the market? And then it just kept going down. So if you just follow the trend and it's a consistent trend, that's when trend following does well.
So what market environments tend to be difficult for trend investing?
So then the opposite, choppy markets, right? If you have a market that has sharp reversals, just meaning simply, the market goes down really fast and then goes up just as fast, we would call that getting whipsawed. And getting whipsawed is when trend investing doesn't do well. And exactly what is a whipsaw? Well, okay, the market goes down, let's say, fairly fast, and then you get out because the trend is now saying, hey, this trend's no good. We want to get out of this market. And then as soon as you get out, the market goes up. That's getting whipsawed. The way we think about it, though, is we like to think about trend following like paying your health insurance. So each month you pay your health insurance premiums. You don't think, oh man, I lost money this month. Like I didn't get in a car accident, or I didn't have some major health issue, and I paid that health insurance premium. I didn't need it this month. I wish I didn't pay. You don't think like that. You're like, yeah, hey, I'm very grateful that I had no health issues and I had health insurance for this month. You're paying those health insurance premiums for times when you really need it, that one time when you really, really need your health insurance for whatever it may be, right? And there's an enormous medical bill. Man, you look back, you're like, man, I'm happy I paid all those little premiums along the way that, they may not be so little in the moment, right? You're paying a few $100s a month. You could have spent that somewhere else. That's kind of what the whipsaws, like how we view getting whipsawed in the market. there's got to be a cost. There's no such thing as a free lunch. So you get whipsawed, which does happen. That's when trend following is not working well. But that's kind of the premium you pay to hopefully get out for the really big drawdowns.
So Ryan, how might an investor use trend within an overall investment strategy?
Yeah, so it's the old Charlie Munger saying, you always want to invert the problem. So I think it's an interesting question to ask. How do you want to use trend following? Well, then we can look at the other way, right? There was Michelangelo was asked when he was making the statue of David, like, how did you make the statue of David? It's one of the most beautiful pieces of art of all time. And he just said, it's simple. I just removed everything that wasn't David. Well, that's pretty easy. So with trend following, let's think about it. When won't we use trend following? We won't use it well, let's just say trend following is a form of risk management, right? So we won't use it if we're trying to get the absolute highest return you can get, because there is no such thing as a free lunch. So because we're adding something on in terms of risk management, we don't expect that a trend followed portfolio is going to get you the absolute highest return. So if that's your goal, probably not going to use trend following. If we want to move closely with what you see in the financial media on any given day, we don't want to use trend following, because those whipsaws are going to create times where we're just going to be different from the market. Sometimes that different can be fun. Sometimes, hey, we saved money because we got out and the market kept going down. That's a good one. But sometimes they're not fun, right? The whipsaws, you got out and then the market goes up and you're stuck kind of in neutral. But so if you really want to track what's, you're seeing on TV or whatever, probably not great to use trend following. So when do you use trend following then? You use it if you're okay being a little bit different from the market. You're okay with not having the absolute highest returns, but you want some form of protection in a falling market, and you're willing to pay those insurance premiums along the way with the whipsaws.
Awesome. Well, thank you, Ryan, for being with us. I mean, this is super, super helpful information about trend following. I know Alpha Architect has a lot of information on this subject, and you guys also do a lot of education for investors. Where can people go to learn more?
Yeah, best place to go is just alphaarchitect.com. Alpha, ALPHA, and architect like somebody who designed your house. Alphaarchitect.com.
Awesome. And we've also described how we utilize this trend following strategy. We actually call it tactical, but this trend following strategy within our own investment philosophy. So we'll link both to your website as well as a link to our investment philosophy. Well, awesome. Thank you so much, Ryan, for being with us. We really appreciate it.
Thanks for having me.